Abrams Inc. has credit sales in the amount of $6 million during year one. Abrams has a beginning balance allowance of $500,000. During the year, the company wrote off $250,000 of bad debts. Abrams has a history of failing to collect 6% of their sales. So that means what? Percentage of sales. The allowance for uncollectible accounts balance at the end of the year is what? So we know we're calculating the ending balance of our allowance for uncollectibles. So we're going to be solving for this ending balance in this base calculation. So our beginning balance is going to start with $500,000. And how do we calculate our bad debt expense? So if you remember, the percentage of sales method is going to be an income-based approach. And what this means is what we're calculating the percentage of sales as will be a direct computation of our bad debt expense. Whereas the percentage of accounts receivable will be calculating our required ending balance. So our bad debt expense is going to be 6% of our $6 million in sales, which is going to be $360,000. Bad debt expense is always going to be increasing our allowance. So one more thing that we need to note here is going to be our write-off. So we wrote off $250,000. Basically what this means is of the allowance, we're basically giving up on $250,000 worth that we expect to be collecting. So we are going to be reducing this from our allowance for uncollectibles. And now it's just simple math. 500 plus 360 less 250 is 610,000. A is correct.